I believe that peak inflation has happened now.
We've already seen the biggest.
We've seen the biggest number.
This is Las Vegas Real Estate Now with local real estate expert Harvey Blankfeld.
Federal Reserve has signaled it's getting ready to raise interest rates in March. She wrote this in late January.
Okay.
While this could impact mortgage rates, experts say it's difficult to predict if they'll steadily rise throughout the year. Mortgage rates typically don't rise closely with the Fed's rate because it can even move in the opposite direction. Instead, long-term mortgages rates tend to follow the rate of the 10-year Treasury. Would you say that's correct?
Yeah, parsing the language and the stilted delivery. Mortgages, especially, they're long-term loans, and the Federal Reserve moving their rate is moving very short-term interest rates, and so those things don't directly connect together. They influence each other, let's say, or is influenced by one or the other. But the 10-year Treasury more closely tracks the movement of mortgages. The thing I think that a lot of people are really aware of is mortgages have already made that move. Because they're such long-term loans, they can't wait for the announcement. They've been anticipating this move. They anticipate what tomorrow and next year and the next 10 years are going to do, right? And so we've seen this roughly 1.25% increase in mortgages. You talk about a 30-year fixed mortgage from December to now is up about 1.25%.
Wow.
In weeks. The Federal Reserve making their announcement about raising rates, which we expect that'll happen on March 15th. They're going to come out and they're going to say, okay, we're raising our rate. And when that announcement happens, I expect that the Fed's going to say they're going to raise a 0.25 point on the interest rate, right?
Okay.
This is less than Wall Street has priced into mortgages now.
Okay.
And if that in fact happens, you could see some relief out of mortgages, a possible drift back down. What the Fed has signaled in addition to moving the interest rate is they are working actively on their plan for running down their balance sheet. This is the issue that is really worst for mortgages. Because when you talk about the Federal Reserve has built up an $8 trillion balance sheet of treasuries and mortgage-backed securities over the last 12 years. Now they become potentially an active seller of mortgages in the marketplace. So that's more supply coming in. That drives down the price of all mortgages, which drives rates up to attract the same number of buyers. And so that's the negative thing. That's the worry in the mortgage market. I believe that peak inflation has happened now.
We've already seen the biggest.
We've seen the biggest number.
Okay.
And while we could get one more bad report in March, that's going to be the peak, and then we're going to begin sliding back down from there.
Okay.
And once that motion begins, that's good for interest rates as well.
You've been listening to Las Vegas Real Estate Now. If you ever have a question about real estate or any of the other topics we cover, just call me off air or text me at 702-203-1165. You can also check us out on the web at lvrealestateradio.com or on our handle on social media at LV Real Estate Radio.